Have you checked out InsightfulValue yet? If not, you're probably missing out on one of the most interesting market breakdowns out there. Today, we're diving into a company whose stock is down but may still have deep roots worth exploring, Rayonier. This review is for informational and educational purposes only and does not constitute financial advice. So, what's up with Rayonier? The stock's taken a hit recently, raising eyebrows among both growth seekers and dividend investors. But before we jump to conclusions, let's get to know the company a little better. Rayonier is a timberland real estate investment trust, or REIT, headquartered in Florida. It owns, leases, or manages approximately 2.7 million acres of forest land across the United States and New Zealand. Yes, trees, but not just any trees. These assets are part of a long-term renewable resource model that supplies lumber, pulp, and even carbon offsets. It's a classic play for those interested in hard assets, land appreciation, and sustainable income streams. So why is the stock sliding? First, the most recent earnings came in a bit soft. Q1 revenue for 2024 dipped year over year, mainly due to weaker timber prices in the southern US and New Zealand. Timber is a commodity, and pricing power isn't always in Rayonier's control. Operating income also fell slightly, reflecting those same market pressures. Still, the company has a solid balance sheet and continues to pay a steady dividend. That dividend yield, currently hovering around 4%, makes Rayonier attractive to income-focused investors. But the real value question is, does this price dip make the stock a buy? On a value analysis basis, Rayonier's price-to-book and EV to EBITDA ratios suggest it's starting to look underpriced compared to its long-term asset value. Land isn't going anywhere, and neither is the demand for lumber, even with short-term fluctuations. Additionally, Rayonier has been repositioning strategically. They've been focusing on high-quality timberlands and disposing of less productive assets, aiming to boost long-term yield and sustainability. For value investors, this kind of asset-heavy business can offer downside protection with some optionality on commodity pricing and land development. Another interesting angle is carbon credits. Rayonier has been quietly exploring monetization of its forests through carbon markets. As climate policies evolve, this could represent a new and untapped revenue stream that's not yet priced into the stock. At InsightfulValue, we specialize in surfacing exactly this kind of underappreciated upside. We break down the key numbers and explain why companies like Rayonier may be worth a second look without drowning you in industry jargon. Whether you're a seasoned investor or just starting your journey, InsightfulValue is built to simplify financial analysis and give you actionable insights. More info about Rayonier and other undervalued companies can be found at InsightfulValue.com. Check it out if you're into spotting opportunities where others see risk. And if you got value out of this video, don't forget to subscribe to our channel and visit our site at InsightfulValue.com for more in-depth company breakdowns like this.